following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Been on a vacation. Ha ha, not. Been traveling, guys. It's good to be back, though. But that was a heck of a run, though. 2 weeks. Trump won. I had to get out. No, I'm just kidding. I actually had, if you want to know the details of it, this is, if you guys know how painful it is to ride airplanes and stay in airports and beds you don't normally sleep in, this was the drill. Raleigh, Orlando, Sarasota, Clearwater, Orlando, San Diego, San Francisco, Hong Kong, Shenzhen, China, Hong Kong, Manila, and finally down to Bacolod. So, vacation? Not really. Nice little business trip, though. Finally back in the confines of the office here in the Philippines, down in Bacolod, and good to be back with you. Let's take a look at a couple of things just to catch up. I hadn't really been on the air, I guess, in about 2 weeks, and I hope you guys had a great Thanksgiving. Let's catch up after the market's kind of adjusting after the Trump election. And let's take a look at crude really quick. Let's take a look at the January contract. And the reason I want to bring this up is, we kind of had a fake out last week on the contract, getting pretty far up there near the middle of the profile as far as the top of the mountain, the POC, the most well-traveled area in that profile, and then coming down and reversing and closing below. And then we're kind of retesting it this morning, that all-powerful area of concern around 46.63. So we've got to take a look at the dollar when we're talking about any of the commodities right now, but that is a pretty serious move when we get that reversal outside the box after being in all week and then being able to kind of rally back up into that inflection point that's pretty important there. So let's take a look at the dollar. And, Joey and I had been talking about this thing, hitting the 100 and maybe a little bit higher. Met some targets, been kind of bouncing around here. I don't really see any end in sight here in this particular product. We had the new profile attempt to appear last week, and that was a sign to start taking some weight off, but we kind of shot back above there. We've dipped down into the profile this morning, pretty big range actually, but the long-term trend really says not to try to short. I mean, the odds are to try to buy support on this still. You don't have any weekly numbers coming out that really are showing any hints of new supply areas happening. And then going back to crude oil, I think this bodes pretty well for crude to kind of continue to slough off after that reversal last week. So bringing the dollar into the other commodity equations we want to talk about. And let's take a look at the copper situation. I wonder how many people are moving to Canada. I'd bet zero. It's freaking cold up there. Woo. Anyway, copper. This is the drill on copper. Okay. After Joey was talking about Okay. I think we had a little break there in the line on. I'm seeing perfect ping times and trace routes here, so on my end. So I'm not exactly sure what's going on. We had that happen earlier, so we'll keep an eye on it. But taking a look at copper, we never really got down to that 2.3852 area, which will be the ripest area to try to buy this thing. But we've, obviously overshot it again. The weekly's kind of been telling the temperature of the thing, and we kind of came back this morning after that close last week outside the profile, going back and retesting that inflection point 2.6347 and have launched off of there. So what do you do with copper? You do not short it. It's not too high, and there's really nothing standing in the way of this thing to actually go much higher, believe it or not. So really an interesting situation relative to the dollar. And if the dollar starts falling at all, you could take a look at this thing just completely doing a moonshot. Let's take a look at gold. And we're in the I'm just making sure I got my charts here right. We're in the December contract still. So, Joey and I were on the show talking originally about, this thing getting below that 1252 area and continuing to head south. Ultimately, that's what's happened. Here's that kind of scary situation on November 8th and 9th. But, as we kind of traverse below these profiles, you get, more chances to play defense. And that defense above that 1225 area, in this case, I'm sorry, about 1223, we still don't really see any reasons to take this trade off. We are starting to show some green shoots breaking above profiles here on the 240s. You can look at this as a contra trade against that long-term trend down. That number is 1188.20. So if you're looking to pick a battle, you did kind of start breaking stride for the first time since we started this downtrend on the 240s. Here's where you could start looking at possibly nibbling. But again, you're still trading against a long-term trend down, but you do have some green shoots here on gold. Finally, we broke above profiles. We went back and retested it with a little bit of noise here. And it could be a chance to try to look at doing some nibbling on the long side. But remember to put your stops in. All right. We got to take a look at the notes. Got really bearish on this product, if you guys have been listening to the show. There's a 10-year. There's a weekly. Here's a daily. We're going to take a look at this when we come back, folks. Stay tuned.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And we dropped again on the break there, so we're still trying to figure out why these. I'm learning a constant ping here, and we got a new fiber connection we're working with here at the office, and it's literally 100 meg up and 100 meg down. I know that's not astounding in the US there, but it's pretty astounding here. Trust me. Finishing up with the 10-year. This is the 240-minute view. We talked about, there wasn't a lot of things turning around on the weekly or daily view, and there was all the reasons in the world to short the latest sell-offs on crude as we traversed again, not even really showing any hints of bouncing here on the bottom of our profiles on the daily. But you don't really want to take any big stances until you can really have longer term inflection points to lean on for any type of reversal situations. But that all being said, this is our 240-minute view, and I like to always look at these 240s as the regulator of the trade one way or the other. And we did start having some things break, showing some green shoots, just like on gold. We kind of started showing that on the last segment. And there's the big number. I think you can play defense to start nibbling a little bit more of a daring trade, if you will, on the 10-year. And again, where's the odds? Where's the edge? The edge is to still look at the 10-year and find major resistance areas and pound it. But you do have a trading opportunity here, and that 126 or 125, 10, 11. I think you can play defense above. It's kind of nice when these things change, and it's always nice to have a place to lean against, again, to play defense. So that's the 10-year situation. Yeah, I'm trying to figure out where that chink in the armor here with the connection is, but Al, I cannot for the life of me figure out how these things are so fluid looking. It must be Skype this morning, so guys, we apologize. All right. Let's take a look at January beans. This has been something I've been upset with myself, not buying something when it comes to volatility. When we were hovering down here around 965, got off the launching pad there, and this morning we are creeping above that 1050 area. So this is a pretty big deal. I've been bearish on beans for a long time. Big wide middle of the profile there was we started breaking above daily profiles 1025, 1026, and now we've overshot the weekly. So what do you do with beans now? You don't short them, and the last time you had a really serious chance to short beans was a chance to play around with the 1026 area and then the 1050, but now it's you do not want to stand in the way of this particular product. This is up and beyond any type of balanced area, getting away from that balanced area, and at some point we're going to look to try to create another one. But this is kind of a runaway freight train right now, and you don't want to stand in the way of it. All right. Let's take a look at the VIX. We don't look at this very often. Here's a long term on the VIX. So, Steve Banger comes on our show, and we talk about, when's it time to buy volatility and when's it time to sell volatility. Well, we're creeping down into that 12 area again, and you've got a floor at around 1162 on this. So, if you're looking, this thing could kind of just
Are we on, Al? Okay. Guys, apologize. I don't know what's going on with Skype this morning, but maybe a nationwide situation, not sure. But we're on the landline now, talking to you on TFNN. I think our clocks were going to get synced up here. So, all right, we're going to talk about the S&Ps. And I think we're showing still charts, right, in the den. Is that true? Somebody give me a yay or nay there. Okay. All right. So taking a look at the S&Ps, obviously 2184, we're showing this in the scanner also. 2184, the big number that we just completely blew above last week. And, that's the big kind of buy support area, 2184. Here's the daily situation. And even though we're down a little bit this morning, that volatility index, super low still in my opinion. Not showing a lot of hints of things turning around. Here's the 240s, and let me try to get this into perspective here. If you can see already this morning, we've calmed down and touched this 2198. Let's call it 2200 and continue to bounce back above. You don't want to get caught trying to just, outthink this thing right now. There's a bid in the marketplace. We're above profiles on every level. And the 240s guiding this trade up. You've got short-term support, which you've already hit this morning at 2198. We're trading 2205 right now. And you've got, I guess, kind of first level of support at around 2203. So you've got bigger support around 2198.5. Higher support at 2203. And what do you do with this? There's really no divergences going on in anything that I'm looking at also. So can this thing turn around? Yes. Is it better to probably try to trade the VIX rather than try to short these S&Ps if you think we could do a turnaround and we could start pulling back into this 2184 at some point? Yeah, I think that's probably the smarter play. But again, you're supposed to turn the wrench the same way until you're told differently. And right now, the breath situation on our scanner is just ultra positive. There's not a lot of things that are not in concert with what's going on in the markets in general. And are we going to break right now, or are we going to just keep going through it out? I guess we're going to break, guys. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We're transmitting a different way this morning on the phone line at TFNN, so might sound a little different. Skype's having some problems. I just actually looked on the internet. I think they are having some issues this morning. That's how we normally call in. Anyway, calling in from Asia over here on the landline at TFNN. And as we look at our scanner situation here as far as the breadth goes, I mean, we've basically crossed that border into positive territory again, 11-11, and just have never really looked back. Here's our daily situation. There's that really the day that the election results started happening. Here's our 4-hour, and here's our 60-minute. So, and looking at our speed dials up top, you won't see really any type of action to really get on the short bandwagon yet. And I think we've got a caller, John from Philadelphia. Are you there?
John Logan, good morning to you, sir.
Hey, good to hear your voice, my man. How are you?
I love the fact that I can call Clearwater and then get transferred overseas. This is terrific.
Isn't it? It's awesome.
Say,
What's on your mind?
I would like to ask you, please, to pull up with your TAS system the February 2017 natural gas contract. John, first, to give you a full disclosure, I'm long from lower levels. At this time of year, in November, December, I always begin trading or have been trading the February contract, which is natural gas for delivery right in the heart of winter. And Feb natural gas has rallied from like 280 up to 330. I'm wondering if there's anything in your work that suggests it could rally up to the 365 area, or is likely to fail short of that, please?
Yeah, that's a good question. And it's amazing. What was the level you just mentioned, 360?
365, and that's the October peak.
Okay. Yeah. Okay, so one of the, there's a couple of things in your favor here. One of them is I'm showing the weekly on the February 07 contract right now, or excuse me, February 17 contract. Isn't it amazing how time flies?
It is.
But a couple of things in your favor here. We actually have a profile appearing below price action this week already. That is really, really, that's bullish in nature. The other thing is you crossed up above, kind of reversing back up into getting above where the previous profile lows were. So, when we kind of get back when we reverse up into these profiles, a lot of times they're just explored up into the former inflection points at the other kind of boundary of that balanced area. So you've got two things in your favor here. One of them, profile below price action already emitted today at the beginning of the week, and you've also crossed some boundaries from the previous kind of envelope on the outside of the previous long-term balanced area. And that usually, there's a whole system that Steve Vanger and I have actually been looking at, reversing back into the balanced area. A lot of times when you do that, you explore the entire fair auction. And that means that, I think the top of this profile is around, if I can see what that is there, 3.567. So, that's close to that 360 area. You were talking about those recent highs. And that's where I would be looking as a target for this particular trade. As you know, natural gas is not going to go in a straight line. I probably don't have to tell you that. But that's your upside targets here. And I kind of like the way you're thinking here. But you've got some great things in your favor. The short-term support on it kind of lines up around 320, 321.
Thank you on
right
that.
Now.
John, I'm looking at Tiger TV and your weekly profile. I see that that's new. My question, did that just appear, say, Sunday night, Monday morning, or was that kind of tipping its hand Friday?
These usually don't go in force until, on the E-signal, the way I'm showing it right now, until Monday morning or Sunday night, maybe. But, it's in force. It's not going to disappear. It's locked in.
Right.
And that's the good news. So on Bloomberg, Bloomberg wanted to see these profiles kind of readjust. So, for instance, we have in the scanner, let me pull this up. Let me get to the future section really quick here. We show these kind of yellow peelbacks happening on certain cells when new profiles are attempting to appear. Bloomberg, the way they wanted it structured was they wanted the profile to kind of bounce around until it locked in. And I just think that's confusing for me even. And as we look at, so I'd much rather see it the way we're showing it in the scanner in general. But let me see where we're at here with natural gas. Oh, we're probably not showing the February contract in here.
No,
we're showing
the active contract would be December, but I'll just repeat, coming into winter times, I've always I learned this having traded gas for 10 years and been kind of mediocre at it until I discovered or was told and instructed by somebody long ago, hey, when you get into Thanksgiving, get trading January and Feb contracts, because that's, of course, that's the peak of demand, and that's when supply is diminishing and prices, seasonally anyway, are highest.
Got it. No, I mean, I think you're on the right track here. I'm glad you caught that bid down below when you did. But I think this thing can go higher.
Great, John. Thanks so much for sharing that. I appreciate that, and welcome back to the broadcast, sir.
Thanks. Can I ask you a question before we get off?
Sure.
Where are these January beans going to go?
If, and this is a big if South American weather is average, Brazil,
okay,
Argentina, and thus far it is. Thus far, the growing weather down in Brazil, Argentina is good. It's between good and terrific. So it's average, so it's average. And the outlook, at least the next 2 weeks, is good for weather. If that continues, beans are short right here. So
obviously, based on that, I would love to see these things reverse back down below 1050 to really get excited about what you just said. That would, in my mind, that would be safer for me. But I'm liking hearing what you're saying, because I haven't been super bullish on beans. I've kind of missed this move. And again, I'd love to see it just kind of do that key reversal this week and get back down in the balanced area on the weekly that I'm showing right now. So that's music to my ears. Thank you.
John, thank you. Great to talk to you, man. See you.
Great. Thanks, John. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Back to the show. So I'm starting to eliminate things here. I'm calling from Skype to the landline at TFNN, so I'm blaming it all on TFNN Skype now. We've eliminated everything. It's never my fault. We all know this. Here we go. Take a look at ES. The question was, I'm assuming, how do you get hints that there's just a chance to short the futures? And it's easy to fall in the trap of wanting to short stuff all the time. I have been there, and I'm still there sometimes. But, the things usually fall faster than they rise, except when Trump's elected president, of course. But and usually your time frames are compressed to be able to make more money on the short side because, again, things usually fall faster than they rise when they do. But this is just a scary situation. I mean, the only thing that you could really hope for here, I think, is just getting a pullback into 2184. I mean, that's it. So you're looking at taking a pretty un-oddsy trade down 20 S&Ps, and that's kind of probably all she wrote on that trade, just to get a pullback to former resistance, now support on the ES. And the question is, the 240s, they kind of are thin and collapsing, but they really aren't. This is just kind of looking at it over time. I didn't kind of expand that out. I mean, you just had some serious movement before, and it makes them look like they're not that wide. But again, you've got to just kind of expand things out and kind of take a look at them, and really they're just the regulator of the trade up. And if you're going to take a shot on the short side, the only thing you really can play defense against at this stage is at 2203. If we kind of start diving back in the box, which you've already done that, and then got above again, or start breaking below, 2198.5. So those are your two options, and I think they're probably low probability trades. And as much as this thing continues to climb, and maybe the train's left, and you're feeling not on board, there's other products to trade. Look at it that way, and the S&Ps are relatively difficult to trade sometimes, and don't get glued into them. Try to play the probabilities when they're out there, and try not to see things that aren't there. This thing could break, but I think 2184 is kind of wishful thinking. Let's see here. Okay, so somebody's asking if I can show silver, March silver. So let me type that in, SIH7. All right, and there was another one, the NASDAQ December NQZH. Does that mean NQZ6? I think that's what you meant, probably. But we'll take a look at that also. All right. So let's take a look at March silver. All right. So, the big number 2-3 weeks ago, get back below 1755, rallying back a week and a half ago up into that 1755. Trading below profiles, the weekly, there's, here's the daily. I guess the question is what do you do with silver right now? I think you got better trades out there. I don't see a lot happening for gold except that we've kind of broken above those 240s. And there may be a little bit of a contra trade north here for a little while, but again, that's trading against the odds. And silver, I kind of feel the same way. You'd really want to see a daily close above 1676 before you start getting excited about nibbling on silver to trade it back up into 1755. Here's the 240s on March silver. You do have a shot, trying to nibble here. 240s have kind of changed tone here a little bit, but again, you'd really, in my mind, you'd really want to see this get a daily close above 1676 and then start using that to go long if you're thinking about going long silver. On a short-term time frame, that is not a terribly bad-looking situation to try to nibble here. But, again, you've got to keep the longer-term profiles in mind here, and that daily is a pretty powerful situation. A lot of our systems trade on daily inflection points. And we've looked at that data to make that assessment. All right, so let's hit a couple of ETFs here. Let's look at the financials. All right, no mystery here. So widening yield curve and really no end in sight to that right now. That's the weekly. Here's the daily. This is something I can't go long this product right now, and really looking at the 10-year and seeing that it's probably going to consolidate down here at best is really not going to bode really terrible for the financials. So, do you wait to try to lean against 22.33 on the short side on the financials? Again, I think you have better things to devote mental capital towards right now other than the financials. So that's the drill there. Let's take a look at the utilities because this is a situation not exactly enjoying lower bond prices and higher yields. 47.68 is another selling point for the XLU. And why is that the case? If you look at kind of see what happened here, we've kind of explored the fair auction on this current profile. We reversed out of it, and we're going back and trying to retest 47.68. So that'll be a selling point on the XLU. All right, so we've got confirmed that the NASDAQ statement in the den was NQZ6. There we go. All right. So, again, you got some bellwether NASDAQ stocks that are kind of holding this particular index back. And again, we talked about the S&Ps earlier, and I think somebody was alluding to the concept, is it okay to short it? Again, trying to put the odds in your favor. The NASDAQ's a much more attractive situation to short than the S&Ps right now. Guys, we're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I want to show you something that very interesting. Pulled up the S&P 500 and the NASDAQ 100 at the same time, and I'm going to click on our breakdown customs. Wow. There's one stock meeting breakdown criteria right now. What you want to look for, though, if you've got this product, you want to keep this up during the day today, and talking about trying to play the odds and, what's the easier trade, the less stressful trade, put it that way. Trying to short the S&Ps right now, or looking at things that may not be there. And the S&Ps will probably sell off 100 points today after I give this speech. But in the breakdown category, you'll start seeing dynamically when new things are entering this particular category. And if you keep this up, and you can keep up multiple instances of this product at the same time, and keep up different sorts and watch things populate as they happen. Might be something to keep your eye on, trying to, shoot some fish that are in a barrel of despair, put it that way. And as we look at, the outputs as they happen, those are the stocks that are showing relative weakness, breaking down, instead of having to really find things that aren't there, trying to short things that are in the stratosphere. S&Ps could continue to go up. I mean, it is what it is. Downtrend resistance, not a lot of stocks meeting this criteria either. So these are stocks in a downtrend that have just kind of lifted their head up to a state where you could possibly take advantage of them again. Pacific Gas and Electric, PCG, Cabot Oil, COG, American Tower Corp. See if we can get some data. Yeah, so this is a real attractive looking situation to me. AMT, and this is why it's in this custom sort. So these are stocks that have broken down and are just literally rallying back up into an area that may be considered an area to play defense on the short side, or at least be able to kind of put your uncle point in on situations like this. Let's take a look at another one. Looks pretty attractive here. And I'm just looking at this matrix and seeing that I don't want to mess with that one. I don't mess with that one. Here's EIX. Similar situation. Nice little trading opportunity on the short side. And an XLU stock, no doubt. But remember, we were looking at the XLU as if it had a little bit farther to go to whack it again on the ETF itself. So a lot of these looking relatively ripe here. Let's take a look. Let's see, GWW. Is that a similar situation? Yeah. Let's take a look at an XLV stock here. Man, what's it going to take to move this thing? Jeez. Man, that is ugly. How'd you like to be long? Ooh. Man, that would hurt. Yeah. Take a look at MNK. If the market can't drag this thing up, especially with the XLV hopes, you've got to take a look at MNK as a short opportunity, folks. That one looks relatively good. Well, listen, thanks for bearing with us on the technical issues this morning. And I hope you guys have a great trading day. Stay tuned to TFNN. It's good to be back. I will see you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.